Guys, right, we're gonna go and get into the April monthly summary, and we're gonna go into last Friday's move as well as today's move. And yeah, I think I'm just gonna keep it clean, keep it simple today. So it's quite a bit to unpack at the same time, but you know, quickly run over monthly summary. So last month I took 1, 2, 3, 4, 5, 6, 7 trades for a profit of £21 in the end, which is like, it's not great, but you know, it's still something. So we'll take it. We'll take it. It's green month, and yeah, that's fine. It was basically the last trade of the month that kind of caught me out, really. Was it that? No, second to last trade of the month that kind of caught me out. Where, as mentioned, it ate into most of my profits, which was, you know, not ideal. But, you know, overall, it was a good month for learning and whatnot. And yeah, so by now, if we go into the weekly chart, pop off the drawings, you can see that we're now clearly in a bullish move, you know, with the intention of coming up into this gap here. So why I didn't make a video for the last few days, we had a work due on Friday, and we also had bank holiday Monday, so I've just been completely away from the charts, just resetting and recovering pretty much. But now we're back to business. We had Monday, yeah, I just said we had Monday bank holiday. US markets were open, but it was a UK bank holiday, so that is what it is. Right, so in terms of Friday's move, let's have a look. So I did mark it out, I just didn't make a video at the time. Let's have a look. I think it was over here. Yeah, so going into last week, I think we're down for the start of the month, but as I say, or as I mentioned in my previous videos, it was due to, you know, increase in position sizes. You can see here I basically lost 4 trades in a row, pretty much to the same reasons. You know, I went long and then short, and then sooner or later my original idea was correct, and I just basically got caught out by manipulation. Same happened on the Wednesday. I went long and then I went short and got caught out by the manipulation, and price then moved in my direction. So I was having a look at, you know, what was the reason for this, and what else do I need to add? What's another confluence I need to add into my bullish setup? And it pretty much is just waiting for a sweep of liquidity after we get an initial break of structure, before getting in. And to be honest, looking at it, it seems to be as simple as that. So I'm kind of pleased that I have taken those losses. Obviously, it's not ideal. You'd never want to take losses, but it's part of the game. It's going to happen. So looking at Friday's move, you can see from midnight open, traded down into London, displays big time up into this hourly order block here, completely ripped past this high here, and then wicked into this fair value gap. There was also an order block in here, and then, you know, I marked out a trade, so this would have actually been quite a nice one to take. Let's just zoom over to there on the 5-minute. So it's a little bit similar to what we saw today. This was the confluence here. So break of structure, we swept this here and traded into this imbalance. We got a nice order block here, broke away from this, traded back into that, and then there was a slower time frame entry here. As I said, I wasn't going to trade Friday just because I was going out. I didn't want to ruin or just dampen my mood. But this would have been a nice 1.89 to 1 reward at the top of the order block and just above this high here. set just before the New York Open. So from that, price has done its thing. It's traded down over the weekend. And then Monday, I haven't actually had a look at Monday, but by the looks of it, it was pretty dicey. To be honest, not going to go into Monday's move because it's bank holiday and I was out of it. I was out of the markets there. You can see we've come back down, swept all of this. But with Tuesday, so today's move, this would have been an absolute banger of a move, I'm not going to lie. At the time, I just didn't really see my entry. I was just kind of checking to see, if this confluence was going to make a difference. And as you can see, 3.19 to 1 on 2%. That's like £94 risk for 300 quid profit. Let's have a look. So it would have been 12 units, 1.93%. Yeah, 94 for 300 beats. So yeah, today would have been an absolute slapper of a trade, I'm not going to lie. I did just want to kind of be a bit more cautious today as well, just because I had been out of the market for a few days. Just wanted to see what was going on. We also didn't have any news today. So really it was pretty good trading conditions. But in terms of the daily profile, you can see here, come down, trade back up just above 12 a.m. open. Create these lows in the London session, come back up, trade down, manipulate up just before. And like I was saying, with the extra confluence, we got the breaker structure here, traded up above this, swept all of these, and then manipulated down, took everyone out here, and then the setup formed. So a third reason why I didn't take this was because I was watching to see what was happening with these fair value gaps. On a 5 minute, this is also, fair value gap. So if you know what the ICT silver bullet is, basically when price retraces up into a fair value gap and then comes to continue down. But yeah, in terms of what this is here, when looking at the charts, you can see there's liquidity here. I think on the NASDAQ it's quite similar as well. Did we sweep that on the NASDAQ? Yeah, so we got SMT on the NASDAQ where that swept the lows and S&P didn't. So the S&P is more bullish for the fact that they didn't sweep. This is a nice hourly fair value gap that we've now filled and swept liquidity. One last push down before a move up. And then if we come back into here, yeah, so you can see we haven't quite come below this because it's already at the bottom of the fair value gap. I was maybe anticipating, a move under here, but I was thinking it doesn't really have to as long as one of them does it, which is fine. So if we go into this, you can see the 5 minute three here. So initially I was thinking, right, we could see a sweep. I was waiting for a sweep here, and then it happened so early in the session that I was thinking, I could probably see another one happening. And as anticipated, price comes down, 9.50, 9.55, 10 o'clock. We see them push up. On the 1 minute chart, you do actually get a break of structure here at 10:01. I was thinking still not enough for me to get in. My oversight here was I didn't see this as a fair value gap. I've seen a few other people posting their entries literally off this candle here, off the 1 minute fair value gap. The reason I didn't see that is because of the wick, and I think that's just something I need to add to my data and just continue to see how that plays out. But in terms of the thought process behind this, I was like, right, So if we come down, we're higher time frame bullish on the weekly chart. On the daily chart, we're higher time frame bullish. So I'm expecting price to come back up. From that, if we go into the 3-minute chart, where are we at? This was the only down candle here. And I'm thinking, right, so on the 3-minute chart, this candle closes above here, so you could use that as a breaker structure just on a little bit higher time frame for more conviction, and then put your stops just below this wick here. But yeah, how does that look up on the 1 minute? Yeah, so it's still, my price is traded in there, like there's still a tiny little gap here, but there's also this as well. So I was a bit uncertain as to whether price is going to come back down here or just stop here and then continue up. This marker here, this would have been 2 to 1 R. So on the 5-minute, oh, my cat's meowing in the background, no way. Yeah, so in the 5-minute, that would have been just above these highs in this order block here. And then that would have hit at 10, what was that, 10.20, or is that, that was in the 5-minute. Yeah, so 10.23 that would have hit, and that would have been like 180 pounds. And then just gradually, just up and down, up and down, up and down, up and down, just moving towards it. 11.35, we come very close, and then we see quite an aggressive pullback just to sweep out all of this liquidity and trace back into this fair value gap just here. Still holding bullish with the idea that, you know, we'll come up above the midnight open basically and take these relative equal highs, and also this high here, which was set in yesterday's Asian session. Did we actually sweep Asian highs completely? So we go from the wick of this candle. Yeah, so you can see we took out this high literally just recently going into the lunch hour, and now that's all taken out. Price has come back down. So pretty nice move, to be honest. Not bummed out that I missed this, but it just goes to show that, you know, now that I've upped my position size to 2% risk per trade, this one trade alone, you know, the 2 trades I lost last week on the 2% position size came to a total of £263 loss. This one trade alone would have been £300 profit. So you can see that would have made back our money and also given us about £37 profit as well. So, you know, it's absolutely fine. Just shows that the edge works, and I'm going to be implementing this sweeper liquidity a bit. Well, I will be implementing this more just to, you know, give me a bit more time to think about when I'm going to get in. Noticing that, you know, the 10 a.m. reversals happened, and if we go up to 11 o'clock, where do we end up at 11? So 11, pretty much here again. So we drag that down to like that, 2.45 to 1. But yeah, this would have been the target. So yeah, pretty nice, pretty nice. Gonna stay with my eyes open for the rest of the week. I still kind of have a feeling that we could continue higher, although we have now traded above this. This imbalance has been untouched by this wick here, so we do still have this imbalance, and then obviously this high. So yeah, it's one of those. I think on the hourly, did we not touch it? Yeah, so we still have this intact and this intact. We just have to see how we go, pretty much. There is a Fed meeting tomorrow, FOMC meeting. So I probably won't trade tomorrow. Just see what happens on Thursday. And then where I live, we've got a bank holiday on Friday, but obviously the markets will still be open because I live in Jersey, and, you know, that's got nothing to do with the US. Not New Jersey, Jersey Channel Islands. On a 4-hour, you know, higher time frame, I'm still looking at this as a target. We've got this high here, so I'm still very bullish at the moment. And yeah, we just have to see where we go from that. In terms of last week, for a summary, let me just do a custom range on my broker statement. What was the dates? It was the 28th of April to 2nd of May. So let me just quickly tap that in. One sec. 28th April, 2nd of May. So, summary for last week, you know, we had 1, 2, 3, 4, 5 trades, 2 days where I traded 2 times. So, you know, it's a bit more than normal. And then the net loss for last week was £256. And yeah, so it's one of them. Majority of those losses came from those last 2 trades on the higher percentage risk. So yeah, it's one of those. I was feeling a bit bummed out, but also not at the same time, because it's opportunity to learn. And, you know, I've put that learning into action today. And, you know, I can see that's given me a bit more conviction there. So don't really have too much more to talk about. Just wanted to go over this quickly and have a chat about the move today. Like I say, I'm probably going to leave it tomorrow and then just see where we're at on Thursday. And yeah, with all that being said, I will catch you tomorrow.